Hi there, my name is Steve Champion from ER Strategies. Welcome to our webinar today on the federal government's JobMaker scheme, which was announced in the federal budget on the 7th of October. What we want to do is cover areas of the JobMaker plan, so you are up to date on it and how it might apply for your business. I'll just connect to the presentation. This should take about 20-25 minutes. Hope you enjoy. So as I indicated, we're talking about the JobMaker scheme, what you need to know, and welcome to our webinar today. Just a bit of an agenda for today. Firstly, we'll cover off on the aims of the JobMaker scheme, including then moving on to the eligibility requirements for both employers and employees. Talk a little bit about the application process, what's involved in applying for the credit that's available under the JobMaker scheme. And we'll also have a worked example just to go through some numbers to help make sure that you're understanding how it all fits together. And finally, if you've got any questions, clients of ER Strategies are very welcome to call us to ask their questions. Right, so the aim of the JobMaker scheme, now it's a JobMaker hiring credit. I think they've called it that because it's available to employers in arrears, so you can engage an employee or one or more employees under the JobMaker scheme, and then you apply retrospectively for a credit from the Australian Tax Office. We'll go through some of the procedures later on, but that's why they've called it a JobMaker hiring credit. The whole idea of the scheme is to provide businesses with the incentive to take on additional employees, and those employees who were previously on welfare and young people. So the scheme is open to employees who you take on between the age of 16 to 35. As you can see on the screen there, the credit, and it's quite a lucrative one, $200 per week for each employee aged 16 to 29, and $100 per week for each employee aged 30 to 35. There's a maximum of 12 months per employee that they may be under the JobMaker scheme, and the payments are made to the employer with no requirement to pass on the credit to the employee. So it's quite a strong cash boost that the federal government has organised under the JobMaker scheme to enable or to reward employers for taking on new employees, young employees who were previously on welfare, and get them off welfare, get them into working. You must still pay employees the legal minimums under whatever industrial instrument applies to them. So if you're covered by an award or an enterprise agreement, national employment standards, all of those sorts of standard things continue to apply to employees who are under JobMaker. Doesn't change that in any way. Even though you do get quite a lucrative government benefit. So with the JobMaker hiring credit, the government's announced that they're hoping for 450,000 positions to be supported. If you think that that's through, and if it was $200 per employee per week, which is equates to $10,000 per annum, that's $4.5 billion that the federal government is looking to put through JobMaker. So it's quite a central plank of their budget platform, and it's quite lucrative if it can work for your business and to entice you to take on young people, get them off welfare, get them working. As I mentioned before, you can only claim credits for additional jobs created. We'll talk a little bit about how that's defined shortly. It's not meant to be for replacing your existing employees with new employees, although again, there's some elements of detail around that may still make it work for your business. The scheme actually started on budget night, which was 7th of October, and it's closed to new entrants not until 12 months from now, which is 7th of October 2021. So just to think that through, maximum of 12 months an employee can be on a JobMaker. It started from the 7th of October of 2020, and you can continue to engage new entrants under the scheme right up to the 7th of October 2021, and then there's a maximum of 12 months that they can be under the scheme. So the whole scheme will finish on 6th of October 2022. The eligibility requirements, firstly, for employers. So mentioned a couple of times, it's available for each new job you create. The criteria for being a new job, okay, firstly that they have a benchmark date of the 30th of September, which is called the reference date, and they'll look at the number of employees you have employed in your business entity as at that date. They'll also look for an increase in your total payroll spend compared to the 3 months to the 30th of September. So July, August, September, what your total payroll was there. So under JobMaker, you need to increase the number of employees over what you had on the 30th of September, and also increase your payroll beyond what your payroll was for the 3 months up to 30th of September. Just a point of detail, that head count and that payroll baseline, after the first 12 months, the baseline will then become the 30th of September 2021 for people you have under the JobMaker scheme from next year. Okay, some other eligibility requirements for employers. I think for most it's going to be, these are fairly perfunctory, that you hold an ABN, you're up to date with your tax lodgement, that you're registered for PAYG withholding, and you report through single touch payroll. The ATO is administering this scheme, and because you need to be under STP, single touch payroll, they can then check what's actually happening in your business to make sure you're compliant. One really good thing is you don't need to have any fall in turnover under JobMaker, because the primary aim of the scheme is to make sure, or to try to encourage employers to take on new employees who are currently on welfare, new young employees. So it doesn't matter that whether or not you've had a fall in turnover to be under JobMaker. Important thing though, you cannot claim under both the JobKeeper and JobMaker schemes at the same time. What will happen for most employers who were under JobMaker, you'll finish receiving JobKeeper payments then from the JobKeeper program, then you'll start in JobMaker from the next reporting period. Otherwise, JobMaker doesn't affect JobKeeper. JobKeeper still carries on. We've got some more comments on that later on in terms of legacy employers. One key thing to note, if you're able to establish a new business, that new businesses can participate, you need to employ 2 or more employees to be eligible to be under JobMaker. If you think about it, any payroll you have in a new business you set up, well, you wouldn't have had any prior payroll, so anything is going to be, any new payroll you're going to have is additional. So therefore you'll tick that box. You just need to have 2 or more employees to be able to qualify. More eligibility requirements for employees this time. That the employees must have, to be eligible to be in JobMaker, they must have been in receipt of income support payments for a minimum of 3 months before they were hired by you. So which income support payments are they talking about? Job seeker payment, which is obviously the replacement for the old unemployment benefit, the youth allowance other, or the parenting payment. So they're the 3 schemes mentioned by the government in its fact sheet that it put out about JobMaker: job seeker payment, youth allowance other, or the parenting payment. And to be eligible for it, a prospective employee must have been under one of those schemes for at least 1 month out of the 3 months before they were hired by you. So it'd be very important to check that level of detail with the applicants. To be, again, eligible under the scheme, the employees must have worked an average of at least 20 hours per week for the employer during the period. Now, which period are we talking about? We're talking about the 3 months period before you make your first claim. So the hours can vary over the period, as long as they average out over at least 20 hours over the 3 month period before you make your first claim. The employee must be employed by the employer for the period claimed. So if you're getting the JobKeeper credit of either $100 or $200, depending on the age of the employee, then they obviously must have been employed meeting that criteria during the period that you're claiming for. The employees can only be employed by one employer at a time under this scheme. So they might have multiple jobs, but only one employer is able to make a claim under JobMaker, and that employer would have had to have had the employee employed at least 20 hours per week, averaged over the 3-month period. The only other thing is that just to state the obvious, that the employee must also have commenced employment between the 7th of October, which was budget night of 2020, through to the 6th of October 2021. Outside of that period, it won't work because the scheme either wasn't open or will have already closed off. Which employees are able to be employed under the scheme? They can be full-time, they can be part-time, or they can be casuals. All of those qualify as long as they're working at least 20 hours per week, averaged over the period, the reporting period that you're making a claim for. So, for example, if you had 2 part-timers, for example, employed working 20 hours each, you would get $400 total from the government per week for employing those 2 additional employees. There can't be independent contractors, but their hours that the employees work can include paid leave. So that 20 hours average can include things like annual leave or sick leave. It can't include unpaid leave. So, for example, if somebody didn't have any accrued leave left and took some, so they'd have a break where they weren't being paid, you wouldn't be able to claim for that period. The other thing is that casuals don't get paid leave. So, for example, for them, you would only be able to claim whilst they're actually working for you, and as long as that 20 hour is that 20-hour average. Another exclusion from the scheme, just noted there on the slide, is that family members in a family business or also directors of a company or company shareholders won't be considered eligible for the JobMaker scheme. The thinking there is from the government is, if people are not arm's length, they don't want monies being paid to people that perhaps is not all in accordance with the aims of the scheme, so family members are excluded. Right, so the application process, if you're an employer wanting to be involved in the JobMaker scheme, you can register with the ATO after the 7th of December in order to make a claim. Now, you don't have to be registered when you're actually hiring an employee under JobMaker. So you can employ somebody right now and you won't be registered yet, of course, because you can't start registering with the ATO until at least the 7th of December. But you do need to be registered to get paid from the scheme. So some point after the 7th of December, you should register for JobMaker. You then have 3 months to submit your claims after the claim period opens. So there's lots of dates here. Let's just go through some of these dates. You can submit claims for your first period. Now, the scheme started on the 7th of October, so 3 months after that is to the 6th of January. So that's the first claim period that's available for you. So you can engage somebody at some point in that period, and then you can make your claim to the JobMaker credit scheme from the 1st of February. So you're always going to be in arrears, looking backwards at the prior 3 month reporting period. And because you have 3 months to submit the claim, so if you can make your claim from the 1st of February, and it must be made within 3 months of the start of the claim period, well then 1st of February, March, April, so it'll be by the 30th of April that you need to have lodged your claim for that period from the 7th of October 2020 to the 6th of January 2021. Employers under the scheme need to report quarterly that they meet the eligibility criteria, and you'll get paid quarterly in arrears. And the things that are being checked, obviously, are that, for example, the employee continues to work an average of 20 hours per week or more during the review period. You'll get the employees prospective employees who are coming on board to help complete the application form. They'll need to attest that they were receiving some sort of welfare payment, either the job seeker, either the parenting allowance or the youth allowance other. And obviously they also need to be working at least that 20 hours average per week. So so that's the application process. Just go through a bit of a worked example with you. So here's a business, say it's a franchise business. It's got a separate entity for each of its outlets if it's got more than one outlet. And under this example, at the 30th of September 2020, the franchisee had 50 employees, and they were a mixture of full-time, part-time and casual. The payroll for the period, remember it's a 3-month period up until the 30th of September. For this particular business, quite a successful business, was $156,000 when you include the management working in the outlet as well. So the franchisee decided to hire 2 new employees, Rodney and Stella, as their 51st and 52nd employees, as additional part-timers, each working at least 20 hours per week. And they were engaged, for the sake of this exercise, let's say from the 20th of October 2020. This particular business, they had sort of sales finally starting to increase. Let's say that they were based in Victoria, the restrictions are starting to ease, and therefore this business was able to get increased sales, needed more staff. Perfect situation for JobMaker. Both the employees, well, they'd been in lockdown, they'd been receiving JobSeeker for at least 1 month out of the last 3 months, so that box was ticked as well. Now you're going to say, well, hold on, nothing stays the same. What happens if some of your staff resign? So let's just say in this business that 4 casual staff resigned over the 3-month period. Well, you want to make sure that you replace those 4 casuals with at least 4 more. So therefore your numbers haven't decreased, have stayed the same. Plus you've got Rodney and Stella as the extra employees as well. Now, remembering what you have to achieve here is that it's additional payroll, additional employee positions. So we've added 2 extras. But because those 2 extras, Rodney and Stella, are working 20 hours a week each on average, well then they're equivalent of a full-time employee. And maybe you've got some casuals who were working, say, 6 hours a week, or 6 to 8 hours a week, whatever. It would be open to you, if you needed to, just trim your labour a little bit, and maybe take an hour or 2 off those casuals each. It's not sort of affecting them so badly that they could take an unfair dismissal or whatever, but it would be possible to reallocate some of the casuals hours to the part-timers who are being, for whom you're getting the credit from the government. So in the particular example, the 4 casuals that left during the next 3 months, they were replaced by the same number. A little bit of, instead of working 8 hours a week, they'll trim back to, say, 6 hours a week. There's 4 of them, so there's 8 of those hours, but you're taking on Stella and Rodney, which are an extra 40 hours. So therefore you're still well and truly in front. Your total payroll in this situation was still $500 a week higher than what it was before, up until the 3 months period ending the 30th of September. So at that rate, the payroll was $156,000 162,500 for the 3-month period from 1st of October to 30th of December. So therefore that was a tick as well. Actually, it's from the 7th of October to the 6th of January to be absolutely correct. So increased employee numbers went from 50 to 52. Payroll went from $156,000 per quarter to $162,500. So the difference there is more than enough to get the full JobMaker job credit, because you can't claim more in credits than your payroll has gone up. In the situation here, the payroll has gone up more, significantly more than what the JobMaker credit was. So in this particular example, the business was able to receive $400 credit each week, whilst Rodney and Stella remained employed, and they got that for the next 3-month reporting period. The franchisee, then from a practical point of view, registered for the scheme in mid-December, remembering that it opened up on the 7th of December for registration. They then submitted their claim in February, because you couldn't submit the claim before the 1st of February, and they got hopefully paid by the ATO in say March of 2021. So it's just a bit of an example of how the scheme might work in a real sense. Just one comment on JobKeeper and the idea of legacy employers. Now, originally the whole idea of JobKeeper was that, remember we're talking about JobMaker here, but JobKeeper was where there was more than a 30% reduction in sales as a result of COVID, that then employers were able to access originally the $1,500 per fortnight per employee that were under the scheme, and as well as that, there were additional flexibilities under the Fair Work Act to allow you to perhaps get employees to take leave, to change their work location, change their duties, those sorts of things. So those flexibilities for JobKeeper came in. Now, remembering you can't be receiving payments under both JobKeeper and JobMaker, so therefore the $1,500 got reduced to $1,200 per fortnight from memory. But if you're going under JobMaker, well then you won't be eligible to continue to claim under JobKeeper. But the flexibilities that came under the Fair Work Act, the ability to issue stand down directions, take annual leave, those sorts of things, they'll still continue to apply to you as long as you've suffered at least a 10% decline in turnover. So there may be some of those JobKeeper flexibilities you can still access, even if you can't continue to get a payment under JobKeeper. And hopefully you're in a situation where your turnover has improved anyway, beyond that originally 30%, now it's at least 10%, or that must have been a decline to be able to access those flexibilities. Otherwise, JobKeeper continues on. It's not affected otherwise by JobMaker. Okay, so that's pretty much it. Any questions you might have, we'd be delighted to be able to help you. If you're a client of ER Strategies, or you'd like to become a client of ours and access our advisory services, there's our phone number, 1300 55 6637. Always encourage you to ring us rather than sending emails or whatever. When you ring us, we can ask additional questions. We can clarify exactly that you understand the advice you've been given, make sure we're all on the same page. So please give us a call on that national number, 1300 55 6637. Hope you found webinar of interest and informational. We'll put a recording of it on our website. We'll have access to other resources as well, including this deck. So thanks very much for joining us today. Hope you found this informative. Love to talk to you if you need any more advice. And whilst it's not strictly industrial relations sort of information we're talking about here with government welfare programs such as JobMaker, still it's a very generous scheme that the government has set up. They're hoping to spend $4.5 billion on it. Huge boost to the economy. So we'd be delighted to be able to help our clients and people who'd like to be our clients with more information. So have a nice day, and thanks for joining us today.